Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, March the 14th, 2023. It continues to be, in my opinion, a very strange market. I know many of you agree, and we're all just kind of looking at each other like, what are they doing and why? And that remains the mystery, because we're getting some different signals, but they're not actually stacking up in the right direction. So I'm going to kind of dive right into this, but just as a preset, as far as the count goes and my expectations, the market did do what I expected it to do, in that I wanted to see an additional high above 39.40, which was hit yesterday, and to finish an ABC and put a minute or sub-minute wave 2 right there. So what we're really working on here, if this is going to be the count, which my gut actually in a bad way tells me it is, and that bad way is it's like what we're really staring at in the face, in my opinion, folks, is we've got all this set up for a crash. That's the best and the easiest way I can say it. We're set up for a crash. That doesn't mean I'm stepping out and I'm going to, put on all these puts and do this and do that and change all this stuff. But it is telling me that we're likely just going to walk in, because it likely won't start within our regular trading sessions. It's likely to start at some point in Globex, more than likely within Europe, the European time zone. So once it gets to us, in terms of our regular session start of business, it will likely already produce a very strong down day. This afternoon into the close, and basically, I believe I'm going to go down to that 5-minute chart because that's where I saw it. And it would have been into the close right there. And that you can see on my clock, it's 12:55. I live on the West Coast. That's 5 minutes before the bell. So this is 3:55 Eastern time, 5 minutes before the bell. Within a 5-minute bar, it went from 39.37, so we'll call it 38, and at high at 39.57. It ran 20 points in 5 minutes nonstop. And it was a burst of energy that everybody was like, wow, what is going on? And it likely was because it wanted it to be cleanly above the 39.50 strike. So again, it was OTD, 0 days to expiration, ODTE options. Whew, long day. In any case, it was very strange. And they continued to attempt to buy it, or for whatever their positions were telling them, right up for the next hour. And I saw that they were, again, trying to market as high as they can for whatever their positions were. I think this is just kind of very misplaced, and I'm not sure. But if your numbers are saying one thing and you are required to be in a different type of a position, well, you got to come in and you got to make your adjustments now in not a very favorable time to do it, because the market's not very thick. But there were a lot of options trading, et cetera, et cetera. So what we're seeing is kind of really bizarre, in my opinion, because it's a lot of grabbing at straws. And to even walk in, and we were already up strongly. So they had already determined what the reaction was going to be when the CPI number came out this morning. The initial reaction was the market took a nosedive. And we can see that again. We got to go back down to that 5-minute chart, open it up, and where are we going to find our opening? There it is. There's the number. 5-minute chart. The first move up very slightly, then bam. They knocked it all the way down, and we were actually up here. We were up above 3,900. They drove it down to 38.85. And then immediately it just got a tail. I mean, it immediately was like back at 3,900 very, very quickly, and then just started to trade, and then ended up trading all the way up before coming back down, and then we got the balance. But it was your basic, we are just buyers type of a day. And they went after the usual suspects. They went after Apple, they went after Microsoft. But here's the butt kicker today. Metaverse, which is announcing, by the way, we're laying off 10,000 more people. So, well, what comes after that? Why are you laying off 10,000? Well, we don't need them. We're paying too much. It doesn't really fit with our budget. What is the reason? Oh, well, I guess we better run the stock up, because don't forget, it's Meta that has that will buy your stock back from you. But this is on a hope that they're going to pay you more than what you just paid. Or it's just squeezing shorts somewhere. In the options, in the stock, it doesn't make any difference. Something is getting squeezed to the tune of pushing the stock to over 190, pushing it back towards 200, as if that's going to be fair value for this company. It's amazing. It's amazing. Now, whether it's going to be on artificial intelligence, whether it's going to be on all kinds of different things that may apply to metaverse sometime in the future. But right now, I would not agree with that move. So what goes up must come down. It's going to be up to the people, not me. But Microsoft, again, catching fire. So what's our focus now, right? Tuesday, we got through CPI. They didn't care what that number was going to be, and that's pretty obvious. This was algorithmically derived, but all of that took place within a minute or two. Certainly within 5, but it actually took a lot less time to do it. Now, I'm going to go back out to that hourly chart. How do I want to look at this? I'm going to look at it the same way that I've got an ABC for a very small, sub-minute wave 2. I shouldn't say very small. It's been for a ferocious move, like straight buying and straight selling, and both very telling at the time and both very technical, I have to say. So if you're able to read the market, if you're able to read the price action, if you're able to read, say, for example, something such as Bookmap, or a TPO chart, or order volume charts, anything that's going to be telling you where that volume is going and where it's headed and where it collects, so to speak. And that, of course, is called a point of control. But anyway, you get to put all of these little pieces together, and you can often jump in and make an excellent P&L all the way up and actually down as well. And so, but again, it's being technical and getting the right information. It's going to tell you, hang on, don't get out yet. But even inside these, it was moving all over the place. You have these big rallies, and then you have these big dumps, and then the dumps would come more. And again, it's being able to read what's happening. So within that, I feel that we may have completed, simply because of that sell-off. This run-up is what I'm like, what? So again, I sit and I look, go like 1, 2, 1, 2, 1, 2, 1, 2. But are you kidding me? I need to leave open the potential that this is going to run up again on what? Solid nothing? On what? Oh, the Fed's got to do this type news? Our economy, folks, and what's happening within the banking sector, it's real. It is real. And it's not done. In fact, we might just get the tip of the iceberg here with Silicon Valley and Silvergate. And now Signature Bank, right? That they shut down on Sunday. Do we believe? And of course, the Fed's like, oh, we're working our pants off to make sure that this doesn't spill into contagion. We're very, very busy. And then the president, our banking system is sound. Last time I checked, Joe, you're not an economist. Last time I checked Senate and Congress, there may be an economist in there, but no, you're not economists. And if you are, you're using bad models compared to what is getting used now. But they're producing a situation that is going to allow algorithms to take advantage to push a short squeeze and then push a long squeeze and then push a short squeeze. And they do it via the options and they do it via gamma. And then now we've got volatility creeping. Now, volatility had to make sure that it was down, not by much by the end of the day, but it was down when we had all of this movement. But because that market closed up 336 in New York, 66 in the S&P, 281 in the NASDAQ, volatility goes down. Now, to me, true volatility, you don't sell it with all of this market activity that we're seeing. But hey, you know, according to the algorithm or whatever the situation may be, but there will be an uptick in volatility. And their expiration is next Wednesday. I believe tomorrow may be, let me double check, because that would be kind of interesting if we had Volmageddon and it were to come tomorrow or begin overnight. So we can't find that symbol. All right, how about this symbol? There you go. But that has no options. So I've got to get to, maybe this has the options. There we go. It's the 15th of March. So tomorrow we have a volatility expiration. Oh God. So folks, this is a true story now, because we could get another volatility explosion, a Volmageddon, so to speak, because they expire tomorrow. And it's kind of it's filling in. It's filling in. Open interest. So they're sitting right in here. They're going to try to pick their poison. Where do they want to run it? Who's long, who's short? So these die tomorrow. And then we also have just till next, the 22nd. So again, these actually probably are done because they expire tomorrow. So these are the ones we're going to be looking at. And they expire next Wednesday. And look at the size. Lots of trading going on in volatility. I should have noticed that. So sorry about that. This actually dies tomorrow. So all of it being rolled. So it could be volatile. But the Volmageddon part remains. Back over to the charts. And look at this. Puts are outnumbering calls. And we can go over and look at SPX options. These are important. So you got to keep this in mind because of what we have. These control the market. Here again, puts over calls. Not by a whole lot, but enough. And then finally, let's take a look at the ES. And you can do the same thing in the Qs. You can do it in the spiders. You can do it in the diamonds. You can do it in the IWM. Anything that has volatility attached to it, you can look and you can see how things are trading. Look at in the S&P, in the ES future. This is today. Puts dominating over calls. It's interesting. So these are what I look at because, believe it or not, if we really do believe that the markets by far are being controlled by the trading that's going on in the derivatives with all of the underlying component companies going through massive gyrations and a lot of it being targeted to the larger weighted stocks, which are companies which are basically at the same time, they are also the highest cap stock. They have the highest capitalization. So lots of things. Apple Computer finally announces today that they are going to be laying off and they're withholding bonuses. I wonder how far company-wide that withholding bonuses is going to go. It's going to get incredibly interesting as we dig deeper into Silicon Valley Bank and realize all of the stock that was sold by insiders prior to the collapse. So again, they're trying to tell us that all is good and we're under control and the rest of the banking system is fine. Please just keep trading and go buy, everything. And if we want to believe it, well, then go for it, because I think it's not going to last. I think it comes to an end. So I'm believing that this could be a wave 2 and it could be complete, which means we go down. I have to leave open the potential that the market still has one more little strike for the gold or whatever you want to call it. So we have, this is basis the S&P. We have 39.76, 39.95. 96, but that window is actually 39.75 all the way up to 4,006. So that's the window that they could push to. And I would somehow have to consider where it fits in, because this is A, this is B, and this was a clean 5 up to there. So this really, if it goes back up there, messes up the whole thing. What kind of extension it is, I have no idea. But I will work it out. I promise you that. I just have to let the market fill in the blank there. Because in here, if I have 1, 2, and then this is the 3 and a 4, and we would need the 5. It just does not fit, but it does on a line chart. That's what I wanted to make clear. If I'm looking at it on a candlestick basis, I'm like, no way. This is too deep. Look, it's cutting all this off. But when I bring it down, that I take the tails off, it fits. Take the tails off and it fits because it didn't penetrate. So therefore, we have to leave open this potential. We're going to get this run. And they may do it during Globex and start the next leg down in Globex during Globex. So by the time it rolls back into our time zone and our regular trading session, we may already be way down. And therefore, that would be the beginning of the crash. And if it starts tomorrow, I would suspect that we're going to be going in that direction once things start to break down for multiple days. Okay. So for tomorrow, we're going to leave this open. We've got the 200. The 50 is pretty flat, even with all of this. But that is why, because of up, down, up, it stays flat. It's not giving enough. It's not moving enough. It's staying in like a box, so that goes flat. The 20 is slightly angled. The 4 and the 8 hooked and not screaming higher, but angling very strongly higher. So those are very, very small. The 200s tucked around resistance. So downside, again, my opinion, we do this and don't stop, because we'll be up yet another. Actually, it'll still be within the minute third, but it's breaking into a third. This was a C wave. This was a first wave. I'm moving into a third. So this and this and this, where it just keeps on going. There should not be all these circuit breakers that say, oh, no, you can't go below 3,800. That's massive support. You can't go below 3,700. That's massive support, because there will be no reason for it to be massive support. The market will not be oversold. It's, when they continue to hug on to 4,000, like it is their lifeline. If you want to maintain a bullish posture, yes, that's your lifeline. If you want to give the perception that the market is not going to go down, that's your lifeline. But I do think that the market can go down, and it can go down very quickly. It's not going to be easy to trade. If you are already in a position, yes. And if you're positioned via options, or if you're positioned in one of the ultra ETFs, great. Even the spiders, all of it. They'll have great moves. But in the futures, it'll be a very, very wild ride. Very wild ride. There will be moments of, again, this is if it starts to pick up the speed and it's really going. There will be big times that people can come in with their buy orders for whatever the reason is. So, but it'll be good trading. Over to the NASDAQ. I know, I go on, don't I? I'm kind of passionate about this one, though, I got to tell you. Simply because it's like the market is just really screwy. And I think that, truth be known, is far superior than the line that we're being fed. The banking system may be okay, and we are likely going to survive it, but don't talk like it's the best thing since sliced bread. It has problems. And so that's what I'm talking about. It's like you're making it sound like, oh, we're not going to go down another point, not because the banking system is in trouble. The banking system is in trouble. And what's in trouble are the banks like Silicon Valley that didn't pay attention, that put on bad trades. And that can add up real quickly. And so I'm sorry, government, but to talk like that is going to put you in a bad position, because you're going to have to fend and feed it out, or just make sure that you pay all of these depositors, that you come in and you save it with money, which comes from where? So lots. The bond market started to kind of give it up today. Didn't think it had to at first, but then it did. And this is after hours, how they brought it all back. At the close, the markets were, it's a crazy market right now. In the NASDAQ, put a little additional label on it. I got a little sub minute wave A and B within this final C wave to complete a sub-minute wave 2. But here's our limit. 12,475. I want to see this thing, because it's going to be really bizarre, because the only other way, this is too weird. If I'm putting this as the top for minor wave 2, I'm not sure, because if this gets left here and we go up and break that high, then this is going to be left as 3. Best counted as 3. Going to be trouble to count it as 5. But this could be 2. And we could actually come down. I've not seen it in a wave 3 position. But this is all very strange. This all worked out. This, what ends up happening is that the count does present itself and it works itself out. So let's take a quick look at some of these internals and see about what we can look at inside this to give us some type of a clue as to where this all should go. See, there's still not a lot of room, even if I'm going to consider this as a very strange C wave. I have resistance which has been reached at 12,352. A little bit of a black hole, but 100% still sits below that. 12,439. I just really don't want to see it above that, because it backs up the count again. So every time I think that the market is safe and not going to go there, it pulls one of these. All right. Now this again was 0 days to expiration, an explosion, this time in Delta. And Delta, long, they bought, what was the number? Several billion in 5 minutes. It's crazy. In any case, if that's over, then we turn, or we get up and make a little bit of a new high, and then we turn. And it'll be that turn that you're going to want to catch. And we're all waiting for it. So be patient, get signals. Just like, oh, the market's oversold, oh, the market's overbought, and we're going to go. Well, you might have to wait, because the algorithms, they know nothing about any of this. They're pushing a button, and the button is going out and buying, because that's what it's told to do. So there's our resistance. That's the please don't cross line. And notice I said please. But we do have a continued resistance at 12,535, 12,595, 12,600. But I swear I'm not, for one above this one, that would be so bizarre for me, because you can see how far I got to start backing this up to get a clear picture. And this is all kind of mixed up in all these lines. But we're, because if we keep changing our picture, I got to back it up to see, well, what came before, and then what do I need to do? Right now, I'm not doing that. Right now, I'm going to hang out and not try to project, but look for this to finish as a wave 2, and that we do start the downside. All right, this has gone on long enough. I am going to call it right there. Tomorrow, numbers. Yes, we have. And those numbers are going to be in the way of retail sales, producer price index, the core PPI, et cetera, Empire State Manufacturing, business inventories, and that should be it for Wednesday. On Thursday, initial jobless claims, housing starts, Philly Fed manufacturing. That's on Thursday. Friday has this to 12, but I'll go over those. All right. Thank you very much for listening tonight, and I will be back tomorrow. Next update, Wednesday, March the 15th.